Good evening, everybody, and welcome to our webinar on long-term care planning. My name is John Bodner. Most of you know that already. I'm a certified financial planner, and I'm the founder of Bodner Financial Advisors, Inc. here in Florham Park, New Jersey. I am here once again with my partner and fellow certified financial planner, Justin Esposito.
Hello.
Together, we're going to help you think about a critically important part of your financial plan known as long-term care. Long-term care is often neglected because we get so preoccupied with estate planning and the question of how do I plan for when I die? Long-term care is kind of the other side, the flip side of that coin. How do I plan for staying alive rather than how do I plan on what happens to my estate when I die? So we're going to start working through about 20 or so slides. But before we do that, a couple of housekeeping chores here we got to go through. And if you've been on these Bodner Financial webinars before, you have heard this. Number one, you are in watch-only mode, all right? I know a lot of you would love to pepper me tonight with question, like a little Q&A, right? But that's not going to happen, all right? We're in watch-only mode. I don't need to hear a lot of background noise, your neighbor's dog barking, my grandson's making funny faces in the background at Paw. So, yeah, you're in watch-only mode. Number two, it's being recorded. So this will, in about a week or so, after the lawyers and the compliance officers get a hold of it and look at it and make sure that John Bodner and Justin Esposito actually kind of stayed to the script that they said they were going to stay to, and I don't start making some radical claims. So once I get the green light from compliance and the lawyers, then we post it on our YouTube channel. And yes, after the giggling dies down, there is such a thing as a Bodner Financial YouTube channel. And third, we're going to be turning off the camera again, so you can focus on the slides and what we're talking about, and not on Justin's brand new haircut. He kind of, he looks great. I didn't get my hair cut. Not only should, yeah, it blends in with the walls. I should get it dyed while I'm at it too. So we're going to get started here in one sec. Justin is going to turn off the camera. There we go. And we'll see all of you again in about 35, 40 minutes. All right. We'll come back on full screen to say good night on this Thursday night. All right. Long-term care planning. Let me move the slide. When most people think about growing old in retirement, they worry about things like inflation, right? We're always banging the drum here at Bodner Financial about inflation. That's one of the big boogeymen, right? Especially in retirement planning, inflation. We ask questions like, will I be able to maintain my current standard of living with the assets I have, right? But very late in retirement, if you live well into your 90s, like my dear mom, Barbara Joan Bodner, you will no longer be trying to fund your current standard of living, right? Your needs and therefore your living costs will have changed in a major, major way. Because odds are you're not living in your condominium or your home in Monroe Township anymore, like my mom and dad were. You're living in some other type of place, usually an assisted living facility or something similar to that. And that place is writing really big monthly invoices with a very sharp Ticonderoga pencil every month to you or to your power of attorney, whoever's paying your bills. So the retirement plan we make for you here in the office isn't really one plan, it's really two plans. We have, phase one, which is the picture on the left here, right?
Beautiful couple.
This couple over here. In fact, if I use my pointer, right? So, this couple here, that's the early part of retirement, right? Phase one is planning for you to maintain your standard of living for as long as you physically can. This young gentleman here is carrying his sweetheart on his back, right? But then you have phase two, right? The picture on the right, right? Phase two is making a plan for when you can't live this life anymore. So how can you fund phase two in a way that is dignified, comfortable, but also has enough money to pay for this phase two, but also that you lived your best life that you could in phase one? That magic trick is called long-term care planning, all right? And we're going to dive into that now, right? Long-time clients have heard us say over and over again that the greatest ally of any long-term planner is time. Time, all right? It turns out US President Teddy Roosevelt felt the same way. Old age is like everything else. To make a success of it, you've got to start young. All right. So I think what I'll do at this point is hand it off to the kid here and let him start talking about planning.
Oh, yeah, just because I'm in my 40s, I guess it's appropriate here, right? So here we go. Uh, Planning for life in your 80s, well, it really starts in your 40s. We used to say just a few years ago was really in your 50s, but nowadays we even have younger folks starting in their 40s. In fact, our colleague Greg Bushwell, who we work with on the long term care side, he's working on a plan with a 37 and 39-year-old right now, which is pretty wild. But around 40 or 50 years old is really when you want to start to get, you know, going on the planning because that's when you get a front row seat to watching your parents age. And it comes to mind that what do I want to do for my long term care plan? And maybe your parents are paying for care or maybe they're relying on you, right? But anyone who is currently in a caretaking role knows it can be a lot and it can be really burdensome on the family if there isn't a plan for it. There's no getting around it. We all plan on living a long time and growing old, right? That's the goal. So everybody needs a long-term care plan. The question is, should long-term care insurance be part of your plan? And if so, what kind of long-term care? Typically, the best candidate for a long-term care insurance policy is an adult between the ages of 45 and 65 years of age who is currently in good health. And if you look into it earlier rather than later, right? If you look at it more in your 40s and 50s, you will likely find there's more options available to you. Also, the premiums are significantly lower for younger people because typically they're in better health and they're easier to get through the approval and underwriting process. A couple of questions you want to ask yourself is how long can you get away with waiting? Right? If we only had a crystal ball, which, it would make the financial planning so much easier if we had this magic crystal ball. But one of the things that we do know, right, by statistics, is that most types of coverage, if you're looking for it, it's because you currently need it and you're likely too late. So that's why planning for it in your 40s and 50s and prior to you needing the long-term care is really beneficial. You don't want to wait to start to plan for it when you actually need it because by then it's probably too late. So let's start by defining what long-term care coverage is and what it isn't. And for this, I'm going to turn it over to the master who's been doing it for a lot longer than me, right?
Yes, he is. Give it to the old guy
Give it
here.
to the old
All right.
guy.
So long-term care coverage includes the ongoing costs of daily care outside of the hospital setting. All right. So, one more time, actually, I'm not going to use my pointer here. I'm going to turn it off. If I can figure out how to do that. All right. But, most of us, many people assume that the costs of ongoing care and nursing home stays are covered by traditional health care or disability insurance. And that's not true. That's absolutely untrue. Your health insurance does not pay for long-term care or any type of assisted living. Traditional health insurance and Medicare cover temporary medical events, a doctor's appointment, a surgery. I know it's major, but it's temporary. Surgery happens and then it's over. All right. Disability insurance replaces all or part of your income if you cannot work due to illness or injury, but it doesn't pay for the care and expenses required to perform everyday activities of daily living. And we're going to come back to that phrase, activities of daily living, I think on the next slide or maybe two in, right? Also, disability insurance is not in it for the long haul, all right? Your disability insurance ends when you reach retirement or Social Security age. With long-term care insurance, you can maintain coverage throughout your life, all right? So don't fall into the trap to think, well, I have insurance. That's, if I have to go to a nursing home or assisted living facility or independent care, my health insurance is going to pay for it. Absolutely not. Or Medicare is going to pay for it. Absolutely not. All right. To collect on a long-term care policy, a person must be unable to independently perform at least two of the following tasks: bathing, dressing, toileting, right? Bathing, dressing, toileting, continence, eating, and transferring. All right. Or, moving from one place to another, which is what we refer to as transferring. All six of these tasks are referred to as activities of daily living. And the disabilities must be chronic and expected to last over 90 days, right? So that's the first way that you can collect on a long-term care policy is your physical inability to perform these activities, two of six of these activities of daily living. The second way that you can qualify for long-term care, right, or coverage, a payout, if you will, is a person might have a cognitive impairment. So it's either physical or mental, right? A cognitive impairment that qualifies you to start collecting your long-term care insurance. All right. Organic cognitive impairment includes chronic conditions such as Alzheimer's, dementia, Parkinson's, a stroke, brain injury, certain mental health conditions, right? Things that might diminish an individual's ability to care for themselves, right? This list is not exhaustive. Believe me, if someone is listening tonight and they actually have a long-term care policy already, there's pages and pages and pages of legalese inside that insurance policy that describes all this stuff, right? The other thing to remember is that if you could be dangerous to yourself or others without supervision, there could be a case for long-term care services there also, all right? So I'm going to let Justin kind of talk about the various different forms that long-term care takes.
Perfect. Yeah, and there's many different forms that, long-term care can take on. Most people think long-term care is only for nursing homes, which couldn't be farther from the truth. Long-term care has really evolved over the last 25 years or so. In fact, most long-term care is happening in the community these days, either at their home or in an adult daycare facility. That's the more preferred way for long-term care these days. And you can see the different options on this slide. Each one of the offerings offer a greater depth of care than the one before it. So let's quickly go through these different ones. There's at-home care. At-home care is things like home health aides and visits from therapists and doctors and nurses. Maybe you're having some meal deliveries and other services provided to you at your home. After home care, you have community care, which is adult daycare. It's there more for social support and wellness programs. Then we go to independent living. All right, these are retirement communities, and they're often with the step up into assisted living later on so that you can age through the long-term care process. It might combine some limited home care, like help with medications and things like this. But for the most part, you're able to do a lot of things on your own, but you need some help. So you're still independent in a lot of ways with a little bit of assistance. Then you go to assisted living. And this is kind of the in between for those who can do some activities of daily living, but maybe not others. When the needs exceed what's possible with the add-ons of independent living, well, then we go to the final stage, which is like nursing home, right? And this is where you have full-time skilled nursing care. And this is what people mostly think long-term care is. But like I said earlier in this slide, most of it is actually a lot of other forms of long-term care, not just nursing homes. All right. Now, the question, becomes, do you need long-term care insurance coverage? And, for that, we're going to go to the next slide, and I'm going to actually let John take it because that's a pretty big question, right? I mean,
Yeah.
that's what we're here to answer tonight.
Well, so do you need it? Do you need long-term care coverage? The U.S. Department of Health and Human Services tells us that 7 in 10 people, so 70% of the people over age 65, will need long-term care at some point in the remainder of their lives. 7 out of 10. That's a pretty big number.
Yeah,
All
most
right.
people.
So I'd say, a lot of us are going to need it. 70% of the people listening to this tonight, right? This, and this slide doesn't really surprise me. I think 7 out of 10 is what I would have guessed. Not 7 out of 10 people in nursing homes, but 7 out of 10 people need some type of care after the age of 65. They're in their 80s, their 90s, and they had like maybe a little nursing service at home, and then they were in assisted living and eventually ended up in a nursing
And most
home.
people
That
don't
doesn't surprise me.
Yeah, and most people don't even think they need it, which is kind of crazy,
Right.
.
This is the one that surprises me, that 40%, of people using long-term care services are under the age of 65. This whole idea that it's not just for older folks. This surprises me. 40% of people using long-term care are under the age of 65.
Wow.
But if you think about it, long-term care coverage is for anyone. So it's a long-term care policy doesn't say if you're unable to do 2 of 6 activities of daily living and you're over age 65. It just says you're unable to do 2 of 5 activities of daily living. What if you're 55 years old and had a stroke? What if you're 40-year-old riding your bike and someone hit you? Some truck went by and you're on your bicycle on the shoulder and the mirror of the truck or the car hits you, right? So it's a much bigger pool of potential candidates than I really thought it was. I'm surprised at the 40% number. So long-term care coverage is for anyone who cannot independently perform the 2 of 6 activities of daily living. All right. And there, like I just went through, there's lots of reasons why you might not be able to do some of those things. Old age is only one of them. All right. So all of us need a long-term care plan because most of us, according to that slide, are going to need long-term care at some point in our lives. So the question is, do you need long-term care insurance to fund the plan? All right, one more time, right? Because long-term care planning can or cannot include insurance coverage. You don't have to have long-term care insurance, but you really should have a long-term care plan. And we're going to talk about that in the next couple of slides here about this whole idea of planning. And then part of the plan might be you buy some insurance coverage. But then again, you might be a person who can't get it for pre-existing health conditions, or maybe you don't need it because of the way that your finances and your balance sheet is set up. So, this is our question. Do you need long-term care insurance coverage? And Justin is going to answer that for you now.
Oh, yeah. And you know what? It's going to be an answer that I know it's one of your answers you hate the most
It's
because,
2 words, right?
yeah, it's 2 words. It's 2 words.
Yeah,
And
it's great. It's one of my favorite phrases in response to a question.
I don't like it either, but the answer is it depends. Okay. And it really does. I mean, that's the honest truth. There are three main options when it comes to funding long-term care. And notably missing on this page is Medicare, because as we said earlier, Medicare does not provide long-term care. Okay. It only pays for short-term care under 90 days, but let's run through the three options that do provide long-term care. Medicaid, that's the first one here on the far left, right? We have Medicaid. Those with low enough income and asset levels will qualify for Medicaid coverage. But beware, and I say this with all capitals, you get what you pay for, all right? The selection is limited, the quality is inferior, and also there have been many shortages and wait lists. Just because you qualify for Medicaid, it doesn't mean that you're guaranteed a bed. Odds are, if you are Medicaid eligible, you are not one of our clients, right? I mean, because we typically have a plan for phase two, and our preferred planning is not to depend on Medicaid and for you to be poor for your long-term care plan. We'll talk about that a little bit more, but a lot of people think that's going to be their plan, but it's not the best plan. Okay. Sitting in the middle here is really the Goldilocks option, right? That you collect on your long-term care insurance, that you meet one of those two tests, either physical or cognitive, and that your long-term care insurance is going to kick in, and then that's going to start to help pay those medical costs. And the third, all the way here to the right, right? These are, for the highest net worth individuals who can afford paying out of pocket, right? Their balance sheets have grown enough that, if they had to go into a facility, they have enough assets to support it. But be careful here, right? Because we don't have that crystal ball that I was referring to, a few slides earlier. We don't know when we're actually going to need long-term care, and we don't know for how long, right? And if it is a long period of time, you could run the risk of bleeding yourself dry and eventually landing on Medicaid, or maybe the money that you were hopefully planning on transferring to loved ones is not there because you ended up spending the majority of it or all of it in long-term care facility. And to talk about Medicaid, I'm going to let John, since there's so much to talk about there, I'll hand it back to you.
Right. So as the slide says, Medicaid is not a lifeboat, but I do want to just emphasize, I'm going to beat this dead horse, that Medicare, right? Medicare, which is what we all get at age 65, that's not the solution to this. All right. So, repeat the mantra. Medicare is not paying. Medicare is not paying, right? Medicaid is a maybe, but remember, you got to be poor. Medicaid is essentially, right, medical welfare. It's welfare. You don't qualify for welfare if you're a millionaire. You got to be poor, right? And I mean poor. That's another discussion. But Medicaid, you have to have no money and no assets. And that's what this slide is starting to talk about, right? There are people, believe it or not, that try to get poor on purpose. The spend down. They know they can't fund their long-term care forever, so they start giving their money away to get their assets low enough to qualify for Medicaid. We call that the Medicaid spend down, right? But that strategy doesn't work the way it used to, right? The government might be slow, but they're not stupid, right? The government catches on eventually. They get it. You know, when I started in this business 40 years ago, um, if you were putting mama or papa into the nursing home, I would tell you on a Friday afternoon, don't go to the nursing home, come back on Monday, and I'll have everything figured out. And we would basically re-register all of mom and dad's assets out of their name, into the kids or into a trust or something, and then you go into the nursing home, and the question is on the questionnaire, what do you own? And mom or dad answer nothing. Last week I owned a lot, but this week I'm poor, I own nothing. And you qualified for Medicaid. You were poor on that day. Well, that worked for a while, and then the government finally figured it out and they added a question to that. It was, what do you own? Nothing. I'm poor. What did you give any money away in the last 12 months? Oh, wait a minute. That's a new question. How much did I give away 12 in the last 12 months? If you bankrupted yourself, then you weren't poor in the last 12 months. So that's why you gave it away 13 months ago. So the question is, what did you give away in the last 12 months? Nothing. 13 months ago, I gave away $1 million, but that's not the question. So you were answering the question honestly. The government figured that out and they changed the question to, what have you given away in the last 36 months? The question today is, what have you given away in the last 60 months? That's 5 years. There is now a 5-year look back period to see if you've transferred any assets to other people or trusts. And if you have, the total amount would put you over the Medicaid asset limit and you're disqualified. All right. So, Medicaid is not a lifeboat. It's not even if you thought that was going to be the fix in your plan, it's not a plan. It's a very difficult plan to implement today, right? The goal is to avoid settling for a Medicaid nursing home. You know, we want our plan to be by design rather than by default, right? So, how much does long-term care insurance cost, right? And I'm going to throw this back to, I was going to answer this, but I'm going to throw this back to Justin since he was such a wise guy with the, it depends. So here you go, Justin. Tell us how much, on average, long-term care insurance costs.
Oh, yeah. And it kind of goes back to, it depends, but a fancier way of answering that, there's a lot of moving parts to long-term care prices, okay? You're looking at things like age and gender, what your current health status is, how much coverage you want, on a monthly basis. Is this an individual or is it a joint policy? Also, what is that maximum daily payout that you're looking for? Are we going to add inflation protection to it? That monthly benefit that we're applying for, are we going to have it increase by 1, 2, 3% inflation per year because we know the cost of long-term care are continuing to go up? How long is your time deductible going to be? A lot of these policies, you have a 30, 60, or 90-day wait before you can go on claim. So you're on the hook for the first 30, 60, 90 days. The more that you're on the hook for and the longer your time deductible is, the cheaper the premium is because it's later that the insurance company has to kick in. And, whether or not this policy is a lifetime policy or not. And, we can get you more accurate numbers when we speak individually because, like I said, there are a lot of different moving parts, but we are going to go through some of the averages just so you can get a general idea of what these long-term care costs could be. Okay. So the average cost of long-term care insurance is $1,200 for a 60-year-old man for $165,000 worth of coverage. Now, the same coverage is $1,960 per year for a 60-year-old woman. And does anyone know why that is? I mean, you can't answer me, so I'm gonna.
So he's looking at me.
I'm looking at
I
you.
know why. I know why, because women live longer. Men go into a nursing home and they usually don't use all their benefit because they just die. They go in and they die.
They get lonely.
Women go in and they live like my mom. I think my mom's going to make 100. I think my mom's going to make 100. She's 93 years old, and unless something happens, unless she has a fall or something, and that's why she's there. So hopefully that won't happen. I think she just might make 100. So coverage is more expensive for women because women live longer.
Yeah, it's kind of the opposite of life insurance, where life insurance is typically more expensive for women and less expensive for men, but on long-term care, it's reversed. Now, married couples, right? If you're doing a joint, long-term care policy, the average cost is $2,550 per year for that same 165,000 combined coverage limit. Now, these are the averages, and you can see the premium payments, they can be pretty substantial. We're not talking about hundreds of dollars, we're talking about thousands of dollars. And these are just the averages, but these costs, are very minimal and, relative to really what the out-of-pocket costs could be if you're paying for long-term care. And, how much do long-term care services cost? And to speak to this, John, you've kind of been through this with clients,
Yeah,
your mom, and
I'm writing checks now from my mom.
yeah. So I'm gonna kind of let you go through the long-term care services and their monthly costs.
Yeah, and these are monthly costs. The numbers that I'm gonna show you are not, you know, they're for any of you that have never had a loved one in an assisted living or nursing home, these numbers might be kind of shocking to you. But keep in mind the fact, first of all, these are the national averages, right? This is US. We have a slide after this about tri-state area, all right? But think about where you live. Life tends to be more expensive here in northern New Jersey and New York City and Connecticut, right? So here's the 2025 costs, right? Monthly. Homemaker. So 44 hours a week for someone to come in and kind of do some of the homemaker chores, right? Cooking meals and cleaning up and, doing that stuff. For $6,300 a month, right? A health aide, $6,400 a month. Adult daycare, $2,000 a month. A private 1-bedroom assisted living, $5,900. Yeah, I wish my mother's was $5,900.
Yeah.
Semi-private, now you move from that. Remember, this is that form of care. If we go all the way back to that slide where Justin was showing the forms of care, we're kind of working our way up to the higher level, right? Nursing home, and then a private nursing home room, 10,000. That was last year, right? These are the numbers. National monthly median costs USA last year. If you add 3% inflation to that, which I think is a very fair and reasonable inflation rate, because it ain't going down. If you're 60 years old today, when you're 80, 20 years from now, or if you're 65 today and 20 years from now, you're 85, and that's really, odds are, granted, we had that slide that 40% of the people are under 65, but that means that 60% are over. So most of the people are going to need it not at 65, at 85, 20 years in the future. That 6 becomes 11, this 2 becomes 4, this 6 becomes 10, and this 10,646 is 20 grand a month. These are big numbers. This wipes out could wipe out your retirement plan. And that's the median in the country. New York City area, northern New Jersey, a little bit more, right? That 10, and this doesn't surprise me. There's most months, my mom is 12 to 15,000 a month, depending upon whether there was any extras that month. She's in a private room, not in a semi. So we're not paying 15,000 every month, but you know, it's getting close. And someday when I'm gonna need that, that 15 will be 30. You know, it'll be 25, 26, 27. You know, these are pretty big numbers. All right. So, how do you pay for that? Well, one of the ways that you look at is long-term care insurance. But there's a new thing kind of that has come out where I like the slide that Jackie came up with here, another branch of the long-term care
That
coverage
Jackie, she's
tree. Yeah,
great with it.
Jackie B, she does a great job on the slides. All right. But Justin, you know, we've used this. What Justin's going to explain, take a couple minutes here and explain this. We've really started to use this a lot.
Yeah, it's just another branch of long-term care coverage where, instead of your traditional, you actually could have life insurance policies with a long-term care rider in it that provides, a benefit. And, some people can't wrap their heads around paying for insurance and they might never need it, right? So traditional long-term care insurance is like homeowners. You might pay a premium for months, years, decades, and you never go on claim. And it's like you paid all of that and you got nothing from it. The industry, has come up with over these years an answer for those people. Like I said, some life insurance policies, they offer long-term care riders, which lets you tap into your policy's death benefit to pay for long-term care while you're still alive. If you collect on it, your beneficiaries will get a lower death benefit, but it sure does beat blowing through your nest egg and depleting your assets, right? Or you could do it the other way around, and you can get long-term care benefits with a death benefit attached so that your beneficiaries, like say if you never went on claim, your beneficiaries, one thing that's going to happen to all of us, and John says this quote in many of our meetings, no one gets out of this alive.
Oh, that's the great American poet Jim Morrison from The Doors. No one gets out of this alive. We should have Jackie run like the song.
Oh,
next
that would
time.
be perfect. Perfect.
We need a soundtrack for our next webinar. Jim Morrison.
So, if you have one of these life insurance policies with long-term care in it, but you never use the long-term care benefit, at least there's a death benefit, and someone in your family food chain, your spouse, your kids, a loved one, they're going to get all your premiums that you paid and more with that death benefit that they collect. So you either get it back in a death benefit, or if you need it for long-term care, you have that in insurance in there in this.
Yeah, I like this. I like, it's long-term care is not cheap. It's not cheap. You're going to pay 2, 3, 4, 5, 6, thousands of dollars a year in premiums. And a big stumbling block over the years was, but what if I don't need it? I go, you're right. What if you don't need it? What if you don't end up in any kind of facility? You just live a nice long life and you go to bed one night and you die, which is kind of the preferred model, I think, right? And so you've paid all this money into this insurance and you never ended up in a long-term care facility. Here's a product that, as Jim Morrison said, no one gets out of this alive, that, I don't know if you're going to end up in a nursing home, but I know sure as hell that we're all going to die. So come hell or high water, by hook or by crook, all those premiums that got paid into that long-term care policy is going to get paid out to the family. It's going to get paid out either through long-term care coverage while you or your spouse are in that nursing home, or you're going to die. And it's paid out as a death benefit. And when this came out about 12 years or so ago, I think it was brilliant. It kind of reinvigorated my discussion with people in this area. Right?
Yeah, and
so
it's really
I got one myself. Me and Karen have one.
Yeah, and it's really the more preferred way. I mean, I would say 9 out of 10 times we're talking to a client regarding long-term care, the more preferred way is to own it through life insurance. And if you do have life insurance already, hey, don't worry, there might be an opportunity. You might be able to exchange that for a newer hybrid life insurance policy with a long-term care rider on it. So if you have some old life insurance that has built up cash value in it and these whole life policies, it might be something that you might want to explore, because at this point, your balance sheet might have grown enough that you really don't need the life insurance so much anymore. But hey, if we can use those dollars and turn it into life insurance with long-term care, it might be the best use of those dollars
Yeah.
that are just sitting there in cash value in your current policy. So it's just, some food for thought. If you have some older policies and you like, to share them with us, or for us to take a look at it and have this conversation, please do, and we'd be more than happy to have that conversation. And the bottom line, make a good plan for long-term care. It is mission critical. Without it, you've only planned for half your retirement, like John said. You only did phase one and not phase two. And we're here to help. So if you're in your 40s or over and you don't have a plan for phase two yet of your retirement, please give us a call, right? Long-term care planning is for each and every one of you. We are all going to grow old. There's no way around it. The question is, transferring the risk to long-term care insurance, is that the right thing for you? I don't know, but we're here to help and we're going to walk you through it. But before we go,
Yeah, last slide.
yeah,
Well, almost the last slide. All
Yeah,
right. You know,
okay.
I mean, I think we're 41 minutes in here. So we told you we get out of here 45 minutes. So we're just kind of in the sweet spot here. So thanks for being here. I hope you found Justin and my advice helpful. You enjoy the rest of the evening. And of course, as always, there's one more slide.
Always one
The
more
most
slide.
exciting announcement from our lawyers. Remember, we got to show this. Leave it on there. Yes, show this slide. So the compliance officers at LPL and the lawyers at FINRA can see that I am always in compliance. Yes, I'm a good soldier that way. So it's Thursday night. There's a team called the New York Jets playing here tonight. And we're in Florham Park, New Jersey, the home of the New York Football Jets, who in the last 3 weeks have 2 wins and 1 bye. It's been 21 days of bliss of being a New York Jet, more than 21 now. It's really like 27 days of bliss as a New York Jet fan. So with that, have a great night.
It's a miracle.
Enjoy the game tonight, and JETS, 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 Jets.
Take care.
All
Good night,
right.
everyone. Thanks for joining us.
And we'll see you. I'm in my Jets green. And Scotty Walker, if you're listening, Jets green, bro. Go Jets.
Take care.